Robert, today Alcoa, the US producer of aluminium, or aluminum as you Americans love to call it, decided it would split itself into two entities, an upstream division that does the mining and a downstream division that does processing. Can you explain a little bit more about what they've proposed and whether we think it's a good idea or not?
Well, broadly, anything that gets any company a little further away from base commodities and base metals at this point sounds like a pretty good idea. Metals prices everywhere are getting hammered. Anybody who has anything to do with the base metals is having a lot of trouble. So what they've done is it's not just a mining business, it's a mining business, a smelting business, and some very basic processing on one side. That's one business that's going to remain Alcoa. And the other side, it's aluminum products for things like autos and airplanes and industrial machinery and agriculture and so on. Now, in general, you might think, good, now we have a company that's not just an aluminum company. They're making stuff, they're adding value, they might have stronger margins. Fine. The question you always have to ask is, what about dis-synergies? Whenever some bankers and some executives slap two companies together, you get a great story about cost savings. So now they're taking two apart.
So conversely, you should expect there to be some loss of savings.
And we haven't, some loss of savings, and we haven't been given much of a clue on that by the company. It's a matter of wait and see.
And what about the valuation argument? We often hear that say, if one part of a company does something that's inherently higher margin or lower capital intensity or more value adding than another part, then that part of the company should command a higher valuation, and therefore that by separating two parts of a company you should get a higher multiple valuation on one. Will that be the case this time around?
Well, the question is, of course, when you separate a company, you separate it in two. So in this case, the further downstream company, in theory, should trade at a higher multiple of its earnings power. It trades at about 7 times its earnings before interest, depreciation, taxation, and so forth. At 7, the downstream part increases in value, in theory, to a higher multiple. The question is, what happens to the basic bauxite mining, alumina, and aluminum business?
Because if that trades at 5, then
then you're back in the same place. So we have to sort of see what the market thinks. And of course, there's another question about the cyclicality of the businesses that the higher value business, the downstream business, are going to be in. They make cars, they make planes, or make parts for cars and planes. Those are businesses that might be turning into a cyclical down period now. So that's another question.
Finally, what about this issue of management focus? There is a school of sort of business school thought that says there's very little crossover between, say, running a bauxite mine and running a fabricating plant that machines wheels for coaches. Do you think Alcoa will be better in terms of management focus if these businesses are run separately?
The problem with the focus argument in the particular case of Alcoa is that the company has already done a very good job in the last couple of years. It's been a terrible couple of years for aluminum stocks in general, but Alcoa has managed to outperform a lot of its rivals as it's gotten into these higher margin, better return on capital businesses, as it's made its mining and smelting operations more efficient. So one does wonder if, having done so well already, all the juice has been squeezed out of the lemon.
I'm sure we'll find out in a year or two's time. Robert, thank you very much.